In this video, we'll speak to Kumar on the subject of trade finance and the financial crime risks and challenges posed by this sector. We'll discuss some trade-based money laundering typologies, we'll discuss some risk mitigation steps that compliance officers can take, and we'll look at some career options that are available in this area of financial crime compliance.
Firstly, Kumar, thank you for joining me today to talk about the topic of global trade finance and the role of financial crime compliance. For my first question, I'd like to just ask about your retirement. So prior to retirement, you were working for for over 40 years, I believe, in the banking industry. And with your final role as working in financial crime compliance related to global trade finance. I was just wondering if you could talk us through what your typical day would look like in that role.
First of all, thanks, Ian. Thank you for having me here today. And to answer your question, out of my 41 years career, I have spent almost 35 years in trade and with trade at different levels. So in a typical day, I utilize my skill set and the experience to the fullest extent to resolve all financial crime-related issues in a timely manner. Of course, without exposing the bank to any undue risk. I usually start my work day early, right? And collaboratively plan my day to ensure that the most urgent work gets done first. Because some days I was really busy with back-to-back meetings with customers and other business units, trade finance, financial crime activities, and or sometimes internal and external audit reviews and meetings and training to peer groups. But I really enjoy doing that. It was a challenging task, but I really enjoy doing that and tried my, the best to maintain the highest level of quality and efficiency. That was in fact endorsed by auditors several times. And also accredited by some of the external independent inspection bodies. So yeah, it's a fun time. If you really enjoy doing financial crime, I mean, you can definitely enjoy your life while you're at work.
Absolutely, it's a very specialized area, trade finance. What type of crime risks and typologies are typical in trade finance?
I don't think that we can draw a line and say these are the risks or typologies in trade. And we also cannot forget the fact that money laundering techniques in the market are evolving. Typologies that you see today may be different or change tomorrow. Or what you reckon as low risk today may be high risk next week. So it is really difficult to restrict the type of AML risk to a particular, list and put them into a sort of one basket. But the global and local regulators and governing bodies have identified few common typologies in trade. We call them as a trade-based money laundering or TBML typologies. Those are the kind of things, but it doesn't mean that you can simply limit your knowledge or reviews only to these typologies. You need to have a holistic review on the transactions to ensure that you mitigate the risk. So that is what we have at the moment. FATF and other regulators have come up with these common typologies in TBML. If you want me to just run through quickly, some of the typologies are over-invoicing, under-invoicing. In the case of over-invoicing, what exporter does, colluding with the importer, they jack up the unit price of the goods and allowing importer to move additional funds across the board, being settlements of the trade transaction, so that it will be looked like a sort of a legit activity. So this is a very challenging situation, Ian, because even though global regulators come up with these typologies, up to now, I don't think we have some kind of a solution to mitigate these risks. but we simply because we don't have, I don't think we can turn a blind eye. We need to basically be vigilant and make sure that we mitigate all the risk arising from these kind of typologies. And the under-invoicing is another kind of a scenario where exporter lower the invoice price, allowing importer to sell the goods in their market at a higher risk, a high rate, and earn more money. So all these typologies are basically to generate more money on legit trade transactions. So as a result, they can basically show them as a sort of a legit money. But the challenges are, I should say, I mean, when it comes to the general merchandise, there are no benchmark market pricing available in any of the resources. So it's a challenging thing. I mean, when it comes to commodities, sometimes you get the benchmark pricing. Bloomberg sometimes come up with the standard pricing on commodity. If it's a metal, you can go to the London Metal Exchange and see what are the prices. But when it comes to the general merchandise, there are no sort of a benchmark market pricing available in any of the external sources. So on top of that, actually, there's another issue. When it comes to the trade pricing, there are so many other costs associated with trade pricing that are not visible to us through the shipping documents that we submit. There may be a freight charges, there may be insurance charges, there may be inland transport charges, packing charges. So as a result, you will never be able to do a sort of apple-to-apple check to see whether the pricing is correct, other than have a kind of a judgmental read to see whether the pricing is not manifestly unusual. That's the only way basically you can handle that situation. And under-invoicing is the same thing. You don't have any market resources or tools to determine the correct pricing of a trade product. Again, short or overshipments, that is also common. This is another challenge. This is an inherited gap in trade. Ian, you may be aware of it. Banks are basically have no access to verify the goods to see whether the shipments are correct. So actually, this is an inherited kind of a issue in trade. On the other hand, we know that shipping agents, shipping lines, they never open the boxes and check what it contains. And even customs, this is the biggest issue in the world because most of the country customs, they don't have a bandwidth to check all containers and open the containers and see what contained there. So as a result, we don't have a kind of a way of, getting a comfort that even though you have a bills of lading or transport document, the goods are actually shipped. And other one is a similar thing, zero or some call it a phantom shipments, shipping no goods at all, but shipping documents are presented, maybe falsified documents. And there are situations where falsely described or mislabeled as a better or lesser goods to get the advantage on unit prices. And there's another issue, common issue, multiple invoicing. This happens generally in the case of a copy document submitted. In some cases, the customers are submitting copy documents to the trade departments of the bank. So in a situation like that, we are not sure whether these originals have been submitted and already submitted to another bank, and funds are already obtained. So as a result, by through copy documents, they can duplicate payments. So all these, as mentioned, all these techniques are used, colluding buyers and sellers to move funds across the borders and disguise illegally earn money through trade activities. These are the common ones, but it doesn't mean not all, and preventing these are a kind of a huge and challenging task.
Of course, and those examples which you've outlined, I think, are really it's a common theme when we're talking about transactions involving invoicing, and paperwork, and it really highlights the fact that within trade finance, it is purely reliant or largely reliant on the documents provided.
Exactly.
When it comes to a compliance officer, so in your previous role managing compliance officers, you mentioned some of the challenges.
I'm sorry to interrupt. I mean, before you go to the next question, I would like to highlight one of the important points here, because there's a huge misperception in the market that TBML can happen only in trade transactions that are presented to the trade units of financial institutions. It's not. TBML can happen even in inward and outward wire transfers, right? We know that about 80% of the global trade are done on open account basis, where export and importers are dealing directly, bypassing respective banks. Exporters ship the goods and send the shipping documents directly to the importer. They don't use banking channels, and particularly for documentation, and only the payments are made through banks by way of wires. So therefore, you may have a clean inward wire. No issues, everything is in order, but the underlying trade activity may not be clean, so, or may be subject to TBML. So that is another concern.
Wow, and that really strengthens the challenges faced by compliance officers within financial institutions. So my next question, and really building on what you've just mentioned about wires, is how can compliance officers, to the best of their ability, can they mitigate some of these risks of under-invoicing, over-invoicing, of having transactions where they don't have sight of the actual items?
Generally the compliance officers, and because since we had no specific tools to mitigate each and every TBML risk individually, they look at two things basically. In general, I mean, it may vary from the compliance officer to compliance officer, but in general, they first look at the customer level checks. We call it customer due diligence or CDD, or some call it KYC checks. In my view, actually, this is the most effective tool to mitigate the money laundering risk in any transaction. Because if you know your customer, if you have done your due diligence to see how they source funds and who are the ultimate beneficial owners, what kind of business they are into, and whether they have any negative news around their business, I mean, that will give you a great comfort and bring down the whatever transactions they do may not be that risky. And also remember, your customer's counterparty is a customer of another bank in another country. So if all the banks are strengthening this CDD or KYC and understand where they source funds from, and that will basically mitigate the TBML risk to a sort of a greater extent. The second check that compliance officers do at transactional level, they go to the counterparty and do a sort of screening and see whether any negative news and see what are their core businesses and the countries they are in. Sometimes you may have a counterparty in Singapore, but they may have another office in Iran, for instance, or Syria, for instance. So you have to do a sort of a holistic review and to understand whether the transaction that you are basically processing is legit and free from any money laundering activities. I mean, you cannot basically have a list or something. Depending on the situation and the risk levels, it may require further drill down, before you take the final decision. So that is how the compliance officers generally mitigate. So they look at it holistically and try to mitigate all the risk around the customers, counterparties, and the transactions.
Really case by case, depending on what's available. One of the points you mentioned, one of the points you touched upon there was the international nature of trade finance? You mentioned that the counterparties may be overseas, or counterparty banks may be overseas. How prevalent is trade-based money laundering here in Canada versus other jurisdictions that you've encountered?
Yeah, I think money laundering can happen everywhere at any time. You don't need, it doesn't require any kind of a specific platform or ground. So Canada is no exception. The TBML is prevalent in Canada. But there are a couple of advantages. I think you touched base on that. The one thing is that the Canada is being rated as a less corrupt country in the corruption perception index. And also we have a banking system with proper money laundering controls installed and governed by a highly regulated banking system in Canada. The second advantage we have is our major trading partner is US. For instance, 75% of Canada's export business is with US, which is also a very highly regulated country. So those will bring down the Canada's overall TBML risk to a great extent. But it doesn't mean that we can't simply turn a blind eye and relax. We need to make sure that we do all the due diligence to ensure that we identify risks arising from each transaction.
It definitely sounds as if trade-based money laundering is a very complex area of money laundering, very specialized area. What advice could you give to a financial crime professional or an aspiring financial crime professional who wants to explore trade-based money laundering? Are there any words of wisdom?
I think three important things here. One is the knowledge levels. Make sure it is up to date because markets and money laundering techniques are evolving. It may require a lot of reading and learning. The second thing is logically thinking. So as you mentioned, international trade or TBML techniques are complex, but it is not rocket science. What you need to do is step into the shoes of the importer or exporter and think logically. Question yourself, if you are doing this business, do you do this way? If not, why? Don't ever assume anything. Always ask why it is always ask the question why. It's $1 million question when it comes to investigations. And then assess the situation holistically. Don't confine your review to a sort of a tick box kind of exercise. Review it holistically. Third thing, ability to articulate the risk that you identify. You must be able to translate that to a language that everyone can understand, and because you may not find similar knowledge levels everywhere in your organization. Try and stay away from the global trade terminology as much as possible. It is really important. If not, the final outcome may impact wrongly or unfairly to your business or to your customer. So those are the key main things for the trade professionals or money laundering professionals should look at when they basically investigate trade-related activities.
You know, when I first posed the question, I was thinking trade-based money laundering would be vastly different from other types of money laundering. But from the key skills that you've mentioned, the risk assessment, the report writing, the critical thinking, really those are very common skills across money laundering. I think it's really the knowledge base that the knowledge of the techniques of how international trade operates. What kind of resources exist for someone who's wanting to upskill their knowledge on trade finance?
I don't think there's a kind of a one-stop kind of a shop, Ian. But there are so many resources, ACAM's webinars, they are really good. They come up with the articles from time to time and they are very, very useful. And GAO articles, US Government Accountability Office, they also publish good articles on TBML from time to time. And BAFT, Other thing is Bankers Associations for Foreign Trade, Finance and Trade. Articles on TBML, they publish really good articles, sometimes quoting FATF and FCA and findings. All these things can be seen in these kind of articles. And even the International Banker, you can go to Google and search them. They also come up with very useful TBML kind of knowledge-based articles. These are good resources to learn and keep your knowledge up to date. Because I don't think you find sort of one kind of stop. ACAMS is one place where you have everything, but other than that, you basically explore and find all these resources to learn and keep your knowledge up to date.
As a follow-on question, a lot of my students, they are in the process of acquiring the knowledge, acquiring the skills, those soft skills, the transferable skills for a career in money laundering. And they're looking at where to go next, what career path to take. In the context of trade-based money laundering, or the combating, I should say, of trade-based money laundering, because we do want to be on the side of the good guys, what type of roles exist in this area?
Yeah, I think, and it varies from bank to bank. In some banks, you will find financial crime combating teams are part of trade department or trade operations. In some places, they are part of financial crime compliance unit. It's a separate team. In any case, I think if someone wants to start his career in combating financial crime in trade, they should be part of financial crime compliance unit, wherever it is, because this unit is generally involved in reviewing or taking final decisions on all business activities, including trade. So ideally, they should look for business advisory roles in financial crime compliance, supporting particularly trade business. So yeah, it may vary from bank to bank, but in general, this is how it works.
I see. One of the big challenges which students or new professionals and new graduates have when looking at entering the job market is that first step, that transition from student to young professional. We've touched upon the different roles available, and you've given some really good insight into where they should look for their first role. We've covered some of the resources and skills that should be maybe demonstrated by the individual. Is there one or two key first steps which you could recommend to someone who's looking to make that first step?
Yeah, I think the subject matter knowledge is key. If you know what is happening in how trade operates, it's easy to determine where the risk is. So it is very important that you have a fairly good knowledge on trade, how trade operates, and what are the pitfalls and what are the gaps in trade processes. Because even though trade has been in place for last maybe 50, 100 years, still there are gaps. As I mentioned, now we are basically handling documents, whereas we have no way of verifying the goods pertaining to those documents. So similarly, there are so many gaps in trade. So if you know where the gaps are, where the risk is, it's very easy for you to arrive at the final decision. With a very fair outcome. That's the key thing, I think. And the second thing is you need to keep your money laundering knowledge up to date. It is very important because markets are evolving, changing, and it's changing so fast. So it's good to have ongoing kind of knowledge on the market techniques and what the market trends and that kind of resource. It's very important. Another thing is about your customer. You should know about your customer. You may look at a transaction of your customer without knowing exactly what the customer is doing. It is happening in trade because it's not a one customer or two customers. You may have a 10,000 customers for the bank. So it's not easy for you to basically keep everything in mind and say, okay, this customer is good or bad or medium or whatever. So you should have a fairly good knowledge on the customer. So as I mentioned before, CDD is one of the important tools to bring down most of the the risk associated with trade transactions. And other than that, it's the TBML typologies and those kind of things is also very important.
You mentioned that trade finance is changing. The risks are changing. The methods are changing. What does the future look like for trade finance and the financial crime risks?
It's very difficult to comment on this at this stage, and because the trend is basically we are heading towards the cyberspace. A lot of banks are talking about blockchains, e-commerce, and online banking for trade and all these things. But we are yet to see how those systems impact on the money laundering, whether it mitigates or whether it opens up sort of more money laundering activities. We don't know. It is changing. Trade finance is changing. It's more than that. And also, we have seen that trade finance is moving towards the open account finance, which is slightly different, right? Trade finance is a kind of a traditional trade finance, whereas the open account finance is where the customer, your customer may be exporter, dealing with your importer directly and do the transaction totally outside the banking channels. And when they want finances, they come to the bank with a copy set of documents and ask for a finance against the receivables from their buyers. So that is the trend, because that is where the business is. Now the most banks are basically looking at, pitching in for that kind of business, even though it's a very high risk area. So generally international banks are well placed to mitigate risk compared to the local banks because they have a footstep or network around the world. So you can basically understand the counterparties, buyers, and sometimes the buyers may be a customer of the same bank in another country. That's a kind of a trend. But yes, it's from the money laundering point of view, it's very difficult to say whether those new systems will mitigate money laundering going forward.
And speaking more short term, I've asked this question of everyone I've spoken to in this series. Obviously, we're in 2020 with COVID-19 still a prominent factor. How has COVID-19 impacted trade finance, and specifically the financial crime risks associated with?
Yeah, it's a very good question, and it has a big impact, honestly, because most of the countries have lockdowns and the shipping agents cannot basically issue the bills of lading. Sometimes you find the documents are coming from some countries, copy set of documents, photocopies of the bills of lading, or unsigned bills of lading. So that has a huge amount of the risk. So I think banks should basically look at differently to mitigate this risk. And there are so many ways of mitigating. Even if you have an unsigned bill of lading or photocopy bills of lading, there are so many outside organizations, independent organizations, who can basically verify the movement of containers, not the goods. We don't know what contained in the containers. The containers from one point to the other point. So that gives you sort of an immense comfort that even though you have an unsigned bill of lading, the underlying business transaction has taken place. So it is impacted. So you need to be very, very careful. Even where I worked before, we were very, very cautious handling the transactions during this COVID. It has a huge impact on the international business.
That's really interesting. And would like to thank you again, Kumar, for your time. Really, when I was planning this trade finance session, I really couldn't think of anyone more knowledgeable or more experienced in the area. So it's really been insightful for me hearing about some of the typologies, the prospects for careers, and the key skills that those compliance officers or those aspiring compliance officers need to know. In terms of trade finance, as a final question, is there one piece of advice or one key message that you would like to give to students watching this video?
Okay, yeah. The estimated amount of money laundered globally in 1 year is average 2 to 5% of global GDP. Or you can say in figures, $800 billion to $2 trillion per year. This diminishes government tax, revenue, and indirectly, harms honest taxpayers like you and me. The deeper, dirty money gets into the international banking system, more difficult it is to identify true origin of the money. So if you are a financial crime professional, understand your customer's business and be vigilant at all times. Make every attempt to counter money laundering, regardless of the size of the business that you manage. In my view, that is one of the great service you can provide to yourself as well as to the rest of the world. So, it's very important that we keep our eyes open on all the transactions.
Excellent. Kumar, it's been an absolute pleasure. Thanks so much for taking the time to answer these questions, and I apologize for disrupting your peaceful retirement. It's been an absolute pleasure really hearing about your wealth of experience, and I know from when we had the professional work together in a large international bank, I was always really fortunate to have your knowledge and expertise, and I think that students watching this video will really benefit from some of the insights that you provided. So once again, just thank you very much.
Thanks, Ian. It's my pleasure. Thank you for having me.